Okay, how you all feeling today? For anybody that follows me knows I've been an admirer of Hyperliquid probably for over a year now. Given what we're building and where we come from, I think anybody should be studying Hyperliquid and seeing what they're doing right and what they can improve on. And they're doing a lot right. So there's a lot there to study. But what people don't talk about a lot is their moats. And so I want to do an intellectually honest review of all they have and whether their moats or not are easily replicable. And I actually don't know if I have a conclusion on this, but my goal is that even the biggest Hyperliquid fans will see this as pretty intellectually honest. Okay, so the first thing is the solution, the client, which is closed source, the validators, which are a couple dozen, coloed in Tokyo. That's somewhat easy to replicate. We did with Fogo. So you can find an open source client. You can it's easy to get a couple of dozen validators. They're pretty open to integrating to new chains. We found we had a lot of inbound. Their optimization and their colo is one area where they're more optimized than most blockchains. But when you compare them to centralized exchanges, they're not as optimized as they could be. That's something we're working on. And, it hasn't really held them back. A lot of the traders, the flow is juicy enough that a lot of the traders kind of put up with whatever latency delay or speed bumps are a result of that non-optimized setup. But that is one area that someone could improve on. The second thing is their economic model and tokenomics. By not having VCs or LPs, there is some advantage there in terms of just tokens out there to be sold on the market. So they kept a pretty tight ship in the early days, which means that most of the tokens are with them. And then their tokenomic design that buys back the majority, that takes the majority of revenue and buys back their token is also a huge strength of theirs. But, anybody can kind of replicate that as long as you can start that from scratch. So if you're too decentralized and unable to implement that because you have this big organization and decentralized governance that maybe won't agree to that, uh, that's harder to do. But it's you know anybody can really look at their their tokenomics, their economic flywheel, and replicate it. Whether they can get as much revenue to do as many buybacks, that's the hard part, right? Okay, so what about the team? The team is small. So 11 people, but they seem to be executing better than anybody. But I would say their organization is not something that uh, is a moat because it's not that big. Um, and the stakes are high now, and a lot of big organizations with deep pockets are going to be coming for them with lots of resources. There's an argument that says that these kind of small, nimble, hungry teams will outperform those big organizations that move slow, and that remains to be seen. But I wouldn't see it as a moat. I mean, one of the biggest criticisms I've heard of them is that they're kind of allergic to scale. And if you look at somebody like Ripple, who is constantly scaling, big organization, doing acquisitions and partnerships, that's a very different approach that I think has meant that they are where they are. So the team is I guess one consideration, and just their ability to scale up, to think bigger in terms of partnerships and acquisitions even. And by buying back most of the token, that's money that could go towards growth. So in one sense, it's productive for the deflationary characteristics of this token. But in another sense, it's money that's not being spent on growth. Whether they can bootstrap that growth in different ways without need for that money is a question. The other thing is their brand. So this is one of, I think, their strongest points, mostly because of the way they've approached everything with integrity. And even the issues they had, I think they handled very well. And so they have a really strong brand. And the question is, can they leverage that in different ways? I think we've seen others also kind of develop strong brands, but not realize that that brand can be leveraged and monetized. And they've kind of doubled down on technology that's maybe aging and that others can surpass. And they never thought about themselves as a brand that has value that could be monetized in creative ways. And the Hyperliquid brand is super strong. And I'm not sure I've seen any kind of effort to somehow monetize that. That's their decision. The other thing is the liquidity. So, and if you break it down into kind of maker liquidity, maybe like HFTs, making markets, and then taker liquidity. On the maker liquidity, that's pretty easy to replicate. The biggest traders on Hyperliquid, we also have aligned with Fogo, and they're ready to go. And so that's not that hard because these traders are very mercenary and like they're gonna go wherever they think there's gonna be juicy taker flow. So it's pretty easy to replicate. On the taker side, though, that's harder to replicate. So they seem to have a lot of punters, whales, putting on big positions, less price sensitive, and that's what attracts that that maker liquidity. And that's really hard to build up. And now, they've been building that for years now, and it seems to be pretty sticky. And they seem to be even replacing, because, there is a lifespan of an average perps trader, and they seem to be replacing that. It's probably one of their biggest moats, the taker flow, the kind of more retail, non professional trader. The other thing is their ability to list new assets and risk manage those is crazy. Even like these pre-market perps, that is not easy, and they seem to be able to list those assets people want to trade. And generally, they're pretty efficient markets. The whole crypto market we found on 1010 isn't super efficient. So there's going to be low liquid perps that they list that are gonna have big moves and big candles and big liquidations. That's just kind of the nature of crypto for now. But their ability to list things fast is probably their biggest strength and moat, and one of the hardest things to replicate, especially if you have to think about risk management of these volatile, low liquid assets. Okay, their integrations. So we can use Phantom as maybe the hallmark integration, and those are hard to get because there's only one Phantom. They have a ton of users, and they worked I think they told the story of how they worked very closely with Hyperliquid to create one of the coolest trading experiences I use on Phantom. And you don't even know you're trading on Hyperliquid. And Hyperliquid's done a great job of those integrations. And like going back to my comment about scale, that is one place where they've thought bigger than just Hyperliquid, and they're scaling. That is one thing though where the brand isn't being strengthened. So you don't even know that you're trading on Hyperliquid when you're trading perps on Phantom. And there's other downsides as well because it's easy for Phantom to just switch Hyperliquid out. And so let's say Citadel comes along and is able to provide even better liquidity than Hyperliquid can on those perps. And they decide to get aggressive and make Phantom a deal that's super attractive to Phantom from an economic standpoint. It's easy. And there is some logistics there with funds and everything and positions, but it's relatively easy for Phantom to just switch out Hyperliquid without any of the users even knowing. And we've recently seen Ripple Prime announce a integration with Hyperliquid, and this is actually how these integrations get switched out even easier. Because what a prime broker does is essentially steps in the middle between the user who's depositing to them and all of these liquidity sources. And they essentially abstract away all of that collateral management with those liquidity sources. So, you deposit it with a prime broker, and they have deposits with all of these different exchanges, liquidity providers, whatever. And all you see is one execution, and you face the prime broker as the counterparty. So what happens is when prime brokers step in, they start to kind of disintermediate all the liquidity sources. And now you're just kind of in a death match for the best price. And so this Ripple Prime announcement that was made is kind of interesting because it could be the beginning of these liquidity sources becoming a lot more commoditized and now in competition. And that's not a great place to be if you're one of those liquidity sources. That happens with liquidity providers as well. In traditional markets, there's things called aggregators, and these aggregators own the end client and they direct them wherever they want. And so they're going to direct them to the place that gives the end client the best execution and gives them the best payout, right? And so it's a fight to win that aggregator smart order routing business. And so although those integrations seem super bullish for Hyperliquid, there's a scenario because they don't own the client and their brand is not front and center, where that becomes a bit of an issue for them because others can compete much easier. And, Phantom, like they have, unless they've signed some kind of exclusivity, and most don't, there's no loyalty to Hyperliquid. Like their job is to give their end users the best price and then make the most money for Phantom that they can reinvest in their growth. And so you're going to start to see as these prime brokers start to step in, those integrations become much more competitive and not like a one-to-one. It's going to be a one-to-many intermediated by prime brokers who abstract all of that funding away for you. Like right now, you have to add funds on Phantom, right? And it's bridging over. A prime broker can come in and say, hey, we're going to like abstract away that additional step so that those people that already have funds in Solana, like they don't have to add funds. Like they can just go from their USDC in Solana and start trading perps. And so that's even more attractive now, right? For the end user and for Phantom. Now you've like removed a step and you've removed friction. Those integrations can become less and less of a moat. So I guess I would summarize like Hyperliquid is doing a lot of great things. The trading activity has been, and the sustainability of it has been super impressive. They've built up a great brand. They have lots of integrations, but others are coming for them. And there's lots of places that they were just a first mover, and so didn't have a lot of competition. And just like anything, when people start seeing a company start making a lot of money, they start pointing their efforts and resources to compete. And so there's a lot of areas that people can compete and potentially improve. And I think actually I give credit to Hyperliquid because it doesn't seem like they're at all complacent. So they just made a new announcement about predictions and options. Like they're pushing the envelope because they probably, they know this as much as anybody, that there are some vulnerabilities and competitions coming. And unless they extend their lead and start pushing new things, they're going to stagnate and be overtaken. And we've seen that with others where they reach all-time highs and, pat each other on the back and think that they're going to be in that position forever. And then somebody else comes along and pretty quickly they're in a bad spot. So that's my review of Hyperliquid and the moats. Don't fade these prime brokers and don't fade the ability to own the end client and route them however you like. That's how it's played out in traditional finance. Robinhood being a great example of somebody who owns the end client and, has built a huge business around that. And that's it. And in terms of Fogo, we're paying attention to some of these things. We're seeing what we want to replicate, what we think we can improve on. And yeah, we're not far behind.